So for those who watched last week's video, you guys will have seen me place a covered call on RIOT platforms for 18 contracts at $9.50, expiring on Friday the 18th. So a couple of days for when this video is posted. Now you can see in the top right corner that on Friday the 18th of October, RIOT closed at $9.86. So for those who watched the end of that previous video, would then say I would do a video next week on if RIOT did get above $9.50, then I would do another video and let you guys know, did I lose my shares? Did I roll it? What did I do? So this is a great lesson in terms of the concept of rolling in options trading. So I could tell that I was getting in trouble here because if I just highlight Thursday's close was $9.20 with a high of $9.46, as you can see in the top left-hand corner. Now, on the Thursday, I decided to roll the position. And what does that mean? That means that I bought back my $9.50 call for a loss, because obviously it was at $9.20. So for the price of to buy back that option was more than what I sold it. And I'll show you the transaction history and we'll go through that in a second. And then I sold to open a new covered call for next Friday, which is October the 25th, at thankfully at a higher strike price. So what that strike price is, I'll show you guys in a second. But I'm glad I did it on the Thursday, because if you look at the Friday, you can see that RIOT was up 7.17%. And like we talked about at the beginning, it closed at $9.86, which was already greater than my current strike price that I had of $9.50. So if I did nothing, I would have lost my 1,800 shares at a loss, by the way, because my average cost is around $11 to $13. And I would have lost quite a bit of money if I did give up my shares. So there is some risk with options trading. Yes, I made $126 in 30 seconds, as I mentioned in the previous video, but there is some management and maintenance needed if you are brand new to options trading. Whereas I've been doing options trading for a while, I already know that if the worst case happened, what am I going to do about it? I always knew I was going to roll. And well, the good thing is in this case, because I own quite a lot of shares of RIOT, I did actually want RIOT to go up, and it did go up quite a bit. And you can see here we had a low of 636, and now obviously 986. And not so long ago, actually, when was that? That was on September the 9th. So again, just over a month, we've gone from $6 to basically nearly $10, which is, just under a 40% move. So this shows the volatility in crypto mining stocks, which is one of the reasons why I love to play options against it as well. So most of the time it goes in your favor, but the once or twice it doesn't, it gets you in a bit of trouble, and therefore you need to do some management, so to speak. So what did we do here? Like I said, we rolled. So I'm going to head over to the statements of the trades. So as I mentioned, I did it on 17th of October. So as I mentioned, I bought back the $9.50 call expiring on Friday, and it cost me $163 to buy this option back. So if I was just to close the option out and be done with the trade, I would have not only given back the $127, but I would have also lost $163. So from doing that trade, it wasn't the best thing to be doing there. I expected RIOT not to get to 9.5. The thing we worked out in the last video, it was about 13%, but we are where we are with it. So these things can happen. So at the exact same time as one trade, you can see I made this trade at 14.15, and again at the same time, it bought back the October 18th, and then I sold the 25th of October, which again is a week later, and I pushed my strike to $11. So in options trading terms, from a covered call perspective, that is rolling up and out, which basically means I'm rolling up in my strike to 11 I'm rolling out in time, out in time by another week. And you can see here the credit that I received, or the premium I received for doing that, was $181. So that netted me out just before commissions, which was, probably about $10 in this example here, that I made $18 on the trade. So think about what I've just done here. I've moved from $9.50 all the way to $11, and I actually got paid. So again, if you take commissions, I didn't really make that much money, but in the grand scheme of things, I was happy to do this even at break even if I really could, to push this out by another $1.50. And this was on the Friday I did this. The Thursday. So on the Friday, we went up to, what was it, $9.86. And it was a 7% move. So I'm glad I did it on the I'm glad I did it on the Thursday and not the Friday. So one of those things was I was toying with my head is, shall I wait to see how the market opens on the Friday, etc. But I was thinking that, we were already going inside the right direction here. So I thought, okay, let's just be safe. When I rolled the option, it was under $9.50. So therefore the buyback wasn't as expensive. And I was able to push out again by $1.50. I was toying with $10 or $10.50. But in hindsight, looking back on it, I'm glad I went to the 11, because I still now got $1.20-ish room, which is again another 10, 14% or whatever it is, move that it has to do within the current week. And the things that are going for me from a technical perspective, again, I haven't got the RSI up here, but you can see now, because it's been on such a big move, it may be overextended. And, whenever a RIOT does do an overextended move, it tends to pull back, and sometimes pulls back quite aggressively. So again, even though it was up 7% on Friday, it can be down 5% on Monday. This is how this stock works, or it can still continue to go higher. But again, if the same thing happens and we get to 10.5 or something like that by Tuesday, Wednesday, and I'm feeling a bit, uneasy about it, I will again roll it out for another week, or maybe even 2 weeks, to pick up more extrinsic value, more time premium, to get this to $11 or $12 or $13, whatever it is, for me to get out of this trade. So in the first trade, I made $126. Again, this is pre-commissions. And then in the second trade, I've made $18. So again, I am up overall on this trade. And if by next Friday on the 25th, if RIOT closes less than $11, I would have banked all of this. The options would expire worthless, and I would have netted, the best part of $140. With, again, not much effort from that perspective. Again, this might sound scary when you're in this scenario of doing this type of role, but again, I do over like 50, 60 trades a month. And this is quite easy for me to manage. So again, it's not a complicated trade, but it's a good way to, if you own a few shares of a particular stock, to skim off the top, as I like to call it, and make an extra 10 to 20% a year. And again, you don't need to do weeklies like how I've done here. You could do monthlies, and again, give yourself a bit more time. You can go further out in time, and then a higher strike. Like I could have sold the 13 in a month's time or something along those lines. But again, I'm barely comfortable as an options trader, which is why I've gone for a week. So again, I promised I would show you another video of this if it did go against me, which it did. But again, overall, it's kind of helped me from the shares that I own, because I made a few grand off the shares in terms of its appreciation value. Still need some time to get there, to get back to the heights of $13, $14. But again, I'm happy to pick up some breadcrumbs while I wait. So I really hope you've enjoyed this video, and I should catch you guys in the next one.